The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Welcome to the July 5th fantastic Friday edition of the Nadex Bull Bear Binary Option Hour. I'm your host, Steve Rhodes. Darrell and Tom are off for the day, but they do send you all the holiday greetings, and I am grateful for your presence here today. My outcome, as always, folks, is to teach you, well, just simply to teach you tools that you can use for your trading system out there. You know, the most important aspect of trading is capital preservation. That means you want to be able to use stops out there at all times, and that's really the beauty of the Nadex platform, because you do set it and forget it. Your risk is your stop. Now, Darrell hosts a show every day, Monday through Friday, holidays excluded, and that show is hosted on Tiger TV on channel. You can get all those. He does a show live from 1 to 2 each day. Absolute, our resident Nadex expert. You can test drive the Nadex platform by going over to the homepage of TFNN.com. You'll see the link. Click on that. Download that. You can test drive it. You've got access to charts, data feed. You can test drive it. It gets funny money into your account and the whole bit out there. So let's start our day here with a beautiful thought. It goes like this. Live life fully while you're here. Experience everything. Take care of yourself and your friends. I always say, have fun, be crazy, be weird if you want to. Go out and screw up. You're going to anyway, so you might as well enjoy that process. Take the opportunity, though, to learn from your mistakes, find the cause of your problems, and eliminate them. Don't try to be perfect, because perfection, folks, that is the lowest standard out there. It just can't be achieved. What you want to do is just simply be an extraordinary example of being a human being. Hey, if one of your mistakes is trading, in trading is using stops, and go ahead and learn to use the Nadex platform, because you do set it and forget it. Let's go check out these markets here. Right now, we've got the Dow up 59 points, the S&P up 7, Composite up 16, Russell 2000 up 5, Google's up $5, Apple down $1.70. Gold getting whacked out here this morning. Gold, silver. You got the U.S. dollar index up about $100.23, trading out at 84.69. You got euro. The euro's back 176 ticks. Should be able to find some support out here. Same thing with the Great British Pound. It's off 381 pips. That's a big move down. Gold is off $41 right now, trading at $12.10. Silver down 95 cents at $18.75. Light sweet crude hasn't really budged. It's at up 49 cents at 101.74. Our call-in number is 877-927-6648. Let's start off the day by taking a look here at the S&P 500. So far, interest session high, 1627.06. What is that doing? 1627.06 going against the downdraft here from the June 20th downdraft, that level 1624.62. It's going to be another light trading session for sure. This will be today. If you get it closed back below 1624.62, you'll have another failure on price and volume. If we take a look at the descending trend line off of the S&P cash out here, if we take a look at the S&P index, the May 22nd high being your first touch point, that was 1687.18. Your next touch point being June 18th, 1654.19. You'll see that trend line is really going to act as a strong resistance level. Thought that might be able to spike up and hit that this morning. By doing that, it would have closed the gap out here from June 19th. That low, 1628.91. Not that couldn't occur, but it looks more like we're having a true reversal here in the marketplace. So the key number, I'll switch over to the New York Stock Exchange. We'll take a look at that. But the key number that I want you to write down on a pad of paper is this, and it's called minus 522. If there are net advancing issues, which really would mean minus advancing issues, minus 5. Did I say 5? Minus 522? I hope I did. If there are more than 522 let's call it what it is, net declining issues, okay? If there are more than 522 at the end of the trading session, that'll be at 4 o'clock today, and I'll tell you at 4 o'clock or 4:06, 4:07, 4:10, whenever I'm done with the introduction to the Tom O'Brien Show, how about that for English? That will have meant that the Bulls have absolutely fumbled the ball, and the Bears will have officially taken back control. Because coming off of this June 24th low here, it wasn't on June 24th that the Bulls actually took place, but they did take the ball back from the Bears on the 25th of June out here. And what we've seen in the marketplace is a nice bounce, but that's all that it's been. It's been a light bounce. Most certainly, look, as we take a look at Wednesday, as we take a look at today's volume, you're going to see light volume on the way down. And one might argue, hey, light volume on the way down, maybe it's just setting up the C point of an A to B equals C to up. No, I don't think so. Well, let me put it to you like this. How certain am I? Because I like to have certainty in trading, and that's really what Nadex is all about. You got certainty because you got your stops in place. When I trade, I have my stops in place, so I've got certainty. Whether I'm right, wrong, or indifferent, I've got my stops in place, and you should too. And here's a so that means I like to have certainty when I trade. Funny that people talk to people about trading, and I ask why they don't take a look at the markets or trade. They'll say, because you don't know where it's going. Well, that's true because there's so much uncertainty. That's what I ask, and they'll say yes, and I'll say, but if you use stops. If you use proper management, you have 100% certainty out here. Today, I can tell you with certainty, you get minus 523 in the marketplace on the New York Stock Exchange as far as net declining issues. The Bulls will have lost control of the ball. Without a doubt. Doesn't mean that they can't that the Bears can't fumble it on the next play, but I will tell you who has possession of the ball will be the Bears in the marketplace. And that's important to know, especially since the market has been coming up against these stiff resistance levels here. Right now, New York Stock Exchange, not too bad. It's trading at 91.56. That is up 21 points, but it looks like that is going to go negative here real quickly, post-haste. Let's go over and take a look at the other indexes. Let's go see what the Dow is doing. And your question is, where is it going to head to? Well, number one, we got a high volume bar down here on June 24th. So without question, where the market is headed back to is the 1560 to 1588 level to test that. If you're coming into that level with volume, then what that's going to do, that's going to set up a huge A to B equals CD down. 1470-ish or so is the range on the S&P 500. I don't have it listed here. We'll take a look at that number when we go take a look at the SPYs. But let's go take a look at the rest of the indexes out here. Let's take a look at the Dow, see what it is doing. The Dow here very close to getting back to now red for the day. Jobs Friday, it's really a great day for trading because Jobs Friday often have pop and drops, and that's what we're seeing take place here in the market. So dropping quickly right now as we take a look at the Dow. What the Dow hadn't done before is actually got up to test the June 20th high, 15,105. Let's see if it did it this morning. Got up to 15,104.51. It doesn't even have the strength to get up there and do the pull-up to actually test the high of the June 20th level. Right now, trading out at $15,000 and 1501 and 15,001.76 out there. Where will the Dow head down to? The Dow is going to head down to June 24th. That's going to be its high volume bar. That level's around 14,551 up to 14,795. That's on our Dow. Let's go take a look at the NDX 100. Let's go see what she is doing out here. The NDX right now is okay. Here, this is going to be important. So the NDX had actually closed inside the gap on Wednesday out here. The gap here being created by the top of the June 20th bar, 2938.10. It closed out on Wednesday at 2941. Now the bottom of the gap down was actually closed, hit this morning and closed. The low of that June 19th candle, 2959.50 out there, and you got up this morning here as it gapped up. It moved up to 2961.32. So the gap is closed now inside of the way I take a look at gaps. The gap is officially closed inside the NDX. That sets up its next run. Down to the minimum, down to the June 24th area, 2825.18 to 2869. Now, as I say, it's a high volume low down there. We'll see that as we go take a look at the actual ETF structure. And if that area gets taken out, for example, in the NDX 100, that's setting up really all this pattern here did today was it set up the the C point, anchored the C point of the A to B equals CD down. Your A point was May 22nd's high. Your B point is the June 24th low. Inside the NDX 100, your C point, now that it's closed that gap, is going to be is today's high. The 1-to-1 takes you to 27.3310. That takes you all the way back, makes a 100% move of a move down to the April 18th level, and that's really where it's headed. Now, it's going to have to get through the June 24th area, and if it does that with volume, that actually sets up a potential move lower. And that lower move would really come all the way back down, and this is where I suspect the market really wants to run to. In the case of the NASDAQ, come all the way back to January 2nd. That was the gap up, and I think it really wants to close the gap here from December 31st, right around the 2665 to the 2716 area, and it looks like that is really what the NDX is on its way to doing. So, look, if you're long the marketplace, just hope that it's on a longer-term basis, not so much the shorter-term basis, but just make sure that you're using stops in your trading out there, and you'll do just fine. And if you don't use stops, then don't be in the marketplace. You got to use stops. You have to use stops. In any event, let's go take a look at the Russell 2000. You don't have to, but if capital preservation is important to you, you have to use stops. Let's take a look at this. We're taking a look at the Russell 2000. Russell 2000 now is, did it get up now? It's made a 100% move of a move by getting back to the June 18th swing point high. That number was 1,001 and a little bit of change. What you actually did inside is you got up to 1,000.79. The actual high was 1,000. It did get over the high. No, 1,001.49. Didn't get over it, but close enough for a reversal. That's what we've got going on inside the Russell. Now, the Russell's actually been stronger than the S&P, than the Dow out here. So, as far as short positions, my preference would be to take the short in the other ETFs, the other indexes out here, versus the Russell. So let's see. Let's go take a look at. We got the Dow. Let's go take a look at the VIX here because this is important for sure. And the VIX, in order for any decline to really continue, you need the VIX to be above the 50-day exponential moving average. The VIX actually this morning here flirted with it, got down below it as it got down to a low of 1554. The actual exponential 50-day moving average 1583. You're at 1617 right now. So really, all the setup is in here. We took a look at the NDX that went ahead and closed the gap. The 50-day getting the VIX getting down and testing the 50-day out there. I did a whole. Not a whole study, but if you go back and listen to last Wednesday's shows, the Tom O'Brien show, or the second hour of my show Monday through Thursday out there, and went through and we took a look at going back. We went back to 2009 to show you how to use a simple tool of the 50-day exponential moving average and identify whether the market really could be in a uptrend or really it's a bounce. And as long as the VIX stays above the 50-day exponential moving average, it is nothing more than a bounce, and that's what we have seen thus far in the marketplace. Still a short trading session, though, and we do have not a short trading session. We're early in the trading session, and it's a light volume day, so anything can happen, as there is with fireworks. But stay tuned. We're going to take a look at the commodity section. We get back from this first break. We'll take a look at Goldilocks, silver, light sweet crude. We can take a look at anything you'd like to as well. Our call-in number is 877-927-6648. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Right now we've got the Dow trading off 15 points, so negative 15. You got the S&P is flat, down 56 cents. Russell 2000 is up 80 cents. NASDAQ down $1.80. So we're back to even here. New York Stock Exchange has dipped to minus 12, and we got negative 622 now net declining issues. A big number to be paying attention to, minus 522. So if at the end of the day you're minus 522, it's a good time if you're not short to go ahead and put your shorts on, or at least consider not taking the long side of your positions over the weekend out here, because the bears will officially have taken control of the game. Now we're looking at the 120-minute chart of the S&P futures contract, and it's got an interesting trend line that price has moved up again. So this morning when I went short the ES Mini, I had picked out this target area here, the 1610, 1609-ish range as a possible area to totally tighten on my stop. So that's what I did here during the break. And that trend line is coming out here off of the 7:30 a.m. high. That level was 1649. Next touch point that you can use if you want would be the high at 2:30 in the afternoon on June 19th. Really, I was just using the high down here, this little evening star reversal configuration at 1:30 in the afternoon on July 1st. And you can see, even as we came into the trading session on Wednesday, into the market close, that was where price got up to in the ES Mini. We saw a break of that here with very light volume over the holiday. Right now, price is trying to attack that trend line. It's a place where we could see the market stall here. It's the 120-minute chart that is also key. I'm going to blow this up on my screen here for you because, when we took a look at the daily chart for the, and I'll go over and take a look at the futures contract, but as we take a look at the daily chart, that was running up right into a resistance, a trend line as well, longer-term trend line, obviously, than on the 120-minute chart. But right here, during this trading session, in 5:30 this morning, we actually got a bearish reversal signal. This was your bearish engulfing candle on the 120-minute chart, and you can see the run-up off of the lows from July 3rd out here. You never saw any bearish candles. You had one right here, which was a little dark cloud cover that took place at 7:30 in the evening on July 4th. But that immediately was erased right out here with the very next candle. So no bearish candles until this one at 5:30 this morning. That was before the jobs numbers. So you wonder, did somebody know something? Were people taking some profits off the table? Well, here's the cool thing, is that bulls and bears can't hide. They just simply can't hide. And what we had here in the trading session that took us into 7:30 before the jobs number came out, you had some additional follow-through in the marketplace. So right now, you do have the ES Mini up against a very strong area, that trend line here that's being tested. If this area fails, what we'll see it move all the way back down, or should see it move all the way back down into those lows from July 3rd, right around the 1594-ish range. If this area here holds, well, then what we're going to see is a market that's just simply going to bounce around, I should say. But if we take a look at the daily chart, everything to me says the bounce of the C point has been formed inside the marketplace out here. But this is a way to take a look at trend lines, areas of support and resistance, bullish, bearish candles, because the market is on a continuous basis providing us with information. So I've made a nice profit here this morning, and I just have a tight stop in place. But this is trading the futures contract versus a longer-term position that I went ahead and actually executed this morning as well in a different trading account. So here's what the market is doing, and it's very helpful, I think, to use all of these different tools. If you'd like to have access to these tools and more, go over to the homepage of TFNN.com, my newsletter service, Mastering Probability. You can test drive that. 2 weeks, absolutely free, no charge to your credit card. But just as important as the trades, the information, and what we're looking at in the marketplace, and it's a newsletter service. I try to get it out by 8 o'clock, 8:15, something like that. This morning it was out by 7:45, and really set up what it was we were looking at in the marketplace. As well as there's also about 30 hours of education. So if you're looking to educate yourself, some of the terminology that we might use here at TFNN, AB equals CD, retracements, what are swing points, how do you identify which swing points you might use, all that information is available to you in the 30 hours worth of education, as well as a number of lunar, if you'd like to understand the lunar patterns that are out there that might be prevalent. I'll give you an idea of a lunar pattern here that's great to be aware of. It's called Moon Conjunction of Pluto. And I can't tell you why this works. It's not one that's really often talked about, but it's one that I most certainly track. And what we can see here is that it's great at identifying market highs and lows. And in this case here, you had the Moon conjunct Pluto on May 27th. That turned out to be a high. Guess what? Coming into June 24th, we also had the Moon conjunct Pluto. That turned out to be a low in the marketplace. Actually, it's a pretty cool tool. Over this weekend, I believe we've got a full moon coming in. Not a full moon, a new moon coming in. 877-927-6648. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern. TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Steve Rhodes here. We've got the Dow is up 15 points right now. S&P up 3.5. NASDAQ up 8. And we've still got the U.S. ES Mini, the 120-minute chart on the screen. And take a look at how price hit that trend line. So that would have been the first target. That was my target of where the futures would trade down to this morning. And then we're going to go now to an intraday chart. And we're going to go, and, you know, if you take a look at here on my screen, if you're watching us on Tiger TV, you can see I love trading the ES Mini. And so you can see I've got 6 different time frames, I should say, on my screen. I've got the shortest term time frame, which is 5 minutes right here, happens to be right now in the center. So I got a 5-minute, a 15-minute, a 30-minute, a 60-minute, 45, and 120. And that gives me all the information that I need to understand what's going on, because I'm always looking for where the bulls and the bears are hanging out. You know, knowing that we had that 120-minute bearish engulfing candle this morning at 5:30, I was just looking for a spike by the jobs report to push up and test that level. That's what we saw take place during that 8:30 to 9 o'clock session. Out there, it got up to 16:30.75, which I also knew was running also into a trend line. That trend line, we'll go over and take a look at it. On the S&P futures, you can see right here, this is black diagonal line. You can see how it hit it. The target, I already had the work already done ahead of time. I knew that the range was 1628.50 to 1635 for a spike, and also that it was going to run right into that trend line. So it became an opportunity to go ahead and take a look at taking a short position. Now what you want to do is you want to use those other time frames to see what else is going on inside the marketplace. So if we take a look at that, let's take a look at what's going on here right now and what we can determine. Right here on the 45-minute chart, as it comes down and it hits that green line here, I'll go ahead and explode it up on my screen for you. That's a 200 period exponential moving average, so we know that that should be an area of support. And right now we're seeing a little hammer candle on the 45-minute chart. So we know that price came down into that trend line, and what we're seeing here in this 45-minute session, we're seeing, which doesn't end till 11 o'clock, so we've got another, 24 minutes or so, but that's forming a hammer candle. That's important to understand because it would say on the 45-minute chart that you would have very strong support at that 1608.25 level, which was also hitting the bottom of that trend line. So it would be very important for today. Likewise, if it doesn't form a hammer candle, it's not a bullish reversal signal on the 45-minute. You want to understand where bulls and bears are. You could say, hey, look, it's a strong candle from the standpoint of that it's got a long lower wick on there, and that it does. I would give that to you, but it wouldn't be a bullish reversal signal. Let's take a look at a shorter term. Let's go from 45 minutes down to a 15-minute chart. The 15-minute chart, we do have a hammer candle. So this candle right here actually qualifies as a hammer that came in at 10:30, and so we know that price went down. It hit that trend line. So I'm not the only one watching this. You're watching this. There's other traders that are watching this and trading it as such. So it comes down, hits that trend line, and creates a hammer candle. Small little wick on the top of this, again, a 15-minute chart that we're taking a look at, and the body twice the size of the actual bottom of the wick out there. Now, we don't have this candle right here that's formed. Doesn't tell us a whole lot. We've got another 8 minutes here, and if we get a close above the open of that candle, which was 1612.75, you get a close above 1612.75, that'll actually be a confirmation of this hammer candle out here on the shorter term 15-minute chart. And we can't pay attention where it's traveling right now at 1611. We need to see what actually happens when we get into that 10:45 session, which we're going to be on the air when that takes place here. So would you take a trade here now? No. Would you have your stops tightened up to understand where the bulls are trying to defend their position? You most certainly would. So that's on the 15-minute chart. Let's go see what the key chart, in my opinion, is always that 30-minute chart. 30-minute chart gives you such great information out here. On the 30-minute chart, there's no way there's going to be a bullish candle. Well, I can't say no way. Anything can happen in the next 7 minutes, but does not look like any kind of bullish candle would form. In order for a bullish candle to form, price probably has to get up to about the 1640-ish level. That would create a piercing candle out there. That would give you your bullish engulfing plus the hammer candle on the 15-minute chart. But the market continues to give us messages all the time, which is really very cool. And that's what you want to be using for your trading here. On the 30-minute chart, what we can see is prices move down into the extreme oversold territory. And so at some point in time, we should see, boy, that's a little vague, isn't it? At some point in time, we should see a bounce. Here's the key. You just pay attention to the candlesticks. You pay attention to the candlesticks. They tell you when the bulls are defending their positions and trying to take control and do a bounce, and they tell you that when the bears, and you can see right here, the bears totally have control of the trading session on the 30-minute chart as we speak. Let's go take a look at some of the currency pairs out here. So we've got going on out there. A lot of movement early on in the currency pair. I suspect it's going to get very quiet. We're taking a look here right now at the Great British Pound, U.S. dollar. If you're short this currency pair, what I can tell you is it's up against some pretty decent support out here. This is where we had the Great British Pound come from a extreme oversold level back in March of 2013, March 12th, formed a hammer candle. Very next candle was a bullish engulfing. That, just like we're looking at the 15-minute chart, here's what we found that took place on the daily chart. It works the same thing, same time frame. I mean, no matter what time frame you use, it can use the same setup, the same pieces of information out here. Now what we're seeing, and that identifies these areas as strong areas of support. That says on the Great British Pound Euro, And you can see here, I'm using the same relative strength, relative weakness indicator at the bottom. You can see right now that's down at 29.51. Anything below 30 gets you truly in over what I'll call the extremish areas of being overbought or oversold. In this case here, oversold. So you're coming down into an area that should hold that support, 1.483. Now let's take a look at the larger A to B equals CD down on this, which is a monster. It's a monster of a move out here. Let's put this in place here. And that is any Gartley cell, that's what you're looking at on my screen here, that turns into the ultimate pattern is the A to B equals CD down. And as we take a look at this, you can see price truly on the left-hand side of that C to D leg. So the move down in the C to D leg even stronger than the A to B leg was. And the 1-to-1 on that takes you to 142. You're at 148. That's another big, huge move down inside the Great British Pound Euro. But right now, it should find some decent support. It could easily bounce from here, and the bounce here would just be nothing more than coming back to a normal retracement level. That normal retracement level, it would at least be a dead cat bounce. I'm not saying it's going to bounce right here. We have to go down and take a look at 30-minute charts and so forth. But on the daily chart, you want to understand that it's up against a good area of support out there, just simply from the candlestick standpoint. A normal bounce on this would take you back to about 152, 150.19, somewhere right around there, assuming that you start to see a reversal take place. That's on the pound. If we go take a look at the the euro, U.S. dollar, that too getting back into a support range, that being the 100% move of a move. No, not a bullish reversal signal here on April 4th. But when the market does make a 100% move of a move, it's usually tired. In this case here, it still has more room, the euro that does, has more room to run to the downside before it gets into its oversold territory. So the bounce here is not as clear as the potential bounce that we would see inside the Great British Pound. When I say it's not as clear, I can see more movement to the downside, maybe a test of the actual lows of April 4th out there being 127. Now when I say a test, folks, what you really want to be looking for here are moves to the downside in the euro, not moves to the upside necessarily, because the euro wants to trade down to 124.47 or potentially lower out there. Let's go take a look at gold. I'll take a look at gold here. We got about 2 minutes before that 15-minute clock on the ES Mini sets up, and we'll go back and take a look at that here. Gold moving down here this morning. 1203 was the 0.786 retracement of the move coming off of the lows here from June 28th low, which was 1186, all the way up to the high here on at 3:30 in the morning on July 2nd. It has not made that area yet, but we also do not have any kind of bullish reversal signal. Yes, the market is in the extreme oversold territory, but that's not a bullish candle. It's green, but it ain't no bullish candle out here. So we could see gold move down. 1203 would be normal. It is trading inside this wide-ranging bar here, so a break of this, meaning the 1030 bar that we're looking at. Again, it's a 30-minute chart that I'm looking at. 1217.70, that would be a rejection of that swing point. That's got big volume down there on that bar at 1030. So that says, hey, are you going to go test the lows, which is 1187.80? You can see it's coming in there with lighter volume. There was 36,000 contracts, and on the big push down here this morning, we saw 32,000 contracts, and as it pushed into this candle here, it's done at only 20,000 contracts. So not enough volume to really bust out the lows of gold, although we got gold trading off $40 right now. Silver is off a little bit more, 97 cents, meaning a little bit more, about 5%. Let's go take a look at silver and see what it is doing on the intraday chart here. Silver just hanging out around the 1 to 1.272 A to B equals CD down, as well as the 0.786 retracement, which is 1858. Its bar here from that time frame, we're looking at the June 27th low, which is $18.18. So no bullish reversal signal here, also in the extreme oversold territory. So we'll see if silver's got enough energy to, and energy meaning a close back above the price point, I'll call it 1870, would be a reversal signal inside of silver. Let's go over, take a look at light sweet crude here, and then we'll go over and take a look at that 15-minute chart on the ES Mini, see if we've gotten any signals out here. Light sweet crude breaking that consolidation trading range. Light sweet crude wants 107, really wants about $114, $113 or so as its next move. Looks like a real breakout, unfortunately, of this trading range that it has been in for about a year's time out there. So back to the ES Mini. From a trading standpoint, let's take a look at it. That's a 30-minute chart, no bullish candle there. But let's go back. We did see that hammer candle on the 15-minute chart out here. There's the 15-minute chart, and it did not get any type of confirmation here on this next candle. However, this candle configuration here actually, for me, makes this candle right here, this hammer candle, actually looks a bit better. Well, I take that. Let me see. Open. Nah. It really. I take that back. If I could rewind, I would rewind, and I would take that back out here right now. So this candle, we still need to see it close above 1613 in order for us to make a determination on this chart that we may have a little bit of a bounce that's going on inside the ES Mini. Otherwise, right now, nothing more than a rest out there. So. Thank you, Z. I see that in the den. Let's take a look here at what else should we look at? There we go. What do we want to look? Oh, we haven't looked at any of the ETFs. So let's go take a look at the ETFs out there. I know we take a look at the Qs. Let's take a look at Qs, the IWM. We're not going to have any volume in the marketplace today, or we shouldn't have too much volume. The Qs here, the NDX went up and tested the swing point low, not swing point, the gap down low from June 19th, 72.68. 43 million shares out there at the open or close to the open today. We saw the Qs move up to 72.58. So not a complete close of that gap. Again, that low 72.68 versus 72.58, so off by 10 cents. Volume so far in the first hour and 15 minutes of trading, what we have is 11 million shares, and what we have is also a rejection of the top of the gap, meaning the June 20th level here. So as long as the Qs close below 72.16, you'll have a failure of that swing point again for a fourth trading session in a row on lighter volume and price out there. And that's on the Qs. We saw the actual NDX had closed the gap earlier in the trading session. What does that set up if we see minus 522 net declining issues, more than 522 in the New York Stock Exchange? It sets up a run in the Qs down to this high volume bar here on June 24th, 41 million shares, right around 69.15 to 70 and a quarter. Let's go take a look at the SPY out here. SPY's right now trading back inside the trading range of that downdraft candle from June 20th. 162.10 is that number. That's got volume there of 321 million shares. So far today in trading, we've got 48 million shares. So volume so far in that first hour, not too shabby out here. It's also tested the high of this little shooting star candle from July 1st, which was 162.48. That has 131 million shares. So long as the SPY closes underneath 162.10, that'll be just another test of the gap and a failure on both price and volume. That sets up a run to go visit the June 24th area, 155.73 to 158.43. And the volume down there, 222 million. So that would be the next really release of information to us. Again, it'll run down there, assuming we get more than 522 net declining issues on the New York Stock Exchange. I don't think I can overemphasize that, because that's true. There's only one thing that really, there's more than one thing to pay attention to, but that is one thing to really pay attention to. The case of the IWM right now, trading out at 98.57. The IWM coming back here and trying to test the recent swing points here from June 18th. They had 40 million shares out there. Pretty decent volume today so far, 9.7 million shares. 877-927-6648. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. On the 4th of July, just continuing on this marketplace, we've got a lot of fireworks. We're going to take a look at some of the international markets right now. The Dow is flat. Down up about 70 cents. S&P up a couple of points. Composite up 6. Russell 2000 up a couple of points as well. One stock here getting hammered this morning, World Acceptance Corp. WRLD is their ticker symbol. The news out on this says they announced after the close Wednesday that it is able to file, let me make sure I get this right here. that has not been able to file its annual report for the fiscal year ended March 31st due to unexpected delays related to additional reviews and analysis that are needed to support its allowance for loans. Uh-oh, that doesn't sound good. Take a look at the stock itself here this morning, trading down with volume, 303,000 shares here trading to the downside, down about 8% right now off $7.21. Let's go see where this is going to try to find some type of support here. Unfortunately, the support on this will take you all the way back into October of 2012. The price range, 62 and a quarter. It's at $81.34 right now. So I suppose when they do release the numbers out here, that's what it is looking for, is making a run down into that level. It also was a tested area. The other reason it's a tested area here, you get a nice little sign of strength back in April of 2012. We'll use a black line going across the screen. You can see that area was tested with that high volume bar rejected, and then price went ahead and moved up. So that's the area of support, somewhere right around, we'll call it 63.76 to the, price came all the way back down to that gap right there where the breakout was, to the area of about 62.23, and that is on World Acceptance Corp out there. Let's go. I said we'll take a look at the world markets. We'll do that, and then we'll go back and peek in on the 15-minute chart out here, because it looks like maybe a little trade to the upside could be setting, just a real quick trade out here. So we'll try to take advantage of that. But let's go to see what's going on around the world, see what's happening in the DAX and the FTSE. Right now, the DAX trading off of its session lows. It's had quite a move. It was up as high as 8,031. You're at 78.36. That's a little under 200 points out there. Actually got down to 78.09. So what's that? I don't know, 220, 230, something like that. So big move as it got back into its swing point from June 28th out here. The DAX has not been able to tag the June 20th area. All markets really trying to do the same. And so the DAX here still has the large A to B equals CD down. That'll take you down to about 71.33 inside the DAX. Let's go look at the FTSE, which has been weaker out there in the marketplace. And when I say weaker, it's already done a 10% move off of its high from May 22nd to the low put in on June 24th here. Today it's gapped up nicely. Let me refresh my screen, make sure I've got the they gapped up. It did gap up nicely today. It got up, though, as high as 64.98. You're at 63.80 right now. So this also selling off just like our market. So in any event, we've got about 30, 40 seconds. Let's go in. Let's peek in on the short-term charts here just so I can leave you properly. We can see here now we got that hammer candle on the 15-minute chart. You're now getting that confirmation. Again, as I say, if price closes above 16.13, we'll see a little bit of a upside reversal here, a little bit of a bounce, working off the oversold condition. The bounce here, what I would expect is to see a bounce take us into about 16.22. Good old sweet 618. Folks, don't forget, this is the last weekend for you to test drive my newsletter service or sign up for it for a 2-week free trial, Mastering Probability. All the details on the homepage at TFNN.com. Thanks so much for tuning in. Have a great Friday. I'll be back with you at 4 o'clock. Take care, folks.